going on, Cheat Cheat fams? I think I'm gonna lose my voice. I feel it because today was my son's game, volleyball game. They were at the playoffs, and I was screaming my voice out, so I might be losing my voice.
Aw.
Can you tell?
A little bit now that you mentioned, I didn't notice it before.
Oh man, yeah, I feel it. It's coming. I'm gonna lose my
That's okay.
voice.
That's okay. You're just being, the best cheerleader dad that you can be.
Oh my god, yeah, it gets me so competitive. It's just crazy, but they did good. They did good. They
I
did good
used to
all
love,
year. So
yeah, I used to love watching C play or CJ play. I'm not into sports whatsoever, but when I watch them, it's a whole different thing. So I totally
yeah,
get it.
yeah, it's gosh. You know what? Let's change it up a little bit today. Let's go over
Yeah.
mortgage rates
Okay.
first. So that way we can get you going. Hopefully we
Absolutely.
sound okay. Um Happy Wednesday, everybody. I know it's been a while. We've been booked, we've been slammed with personal stuff and then business stuff too. So we're glad we're able to come out today and release this out for you guys. But let me go ahead and just share my screen and then we could get this going. So we could talk about rates first and then the market update. Look at that. Mm-mm-mm-mm-mm.
Look at where we're sitting, everybody. Okay.
It went up
I
a little
think
bit.
it did go up a little bit, and again, it is still quite volatile. Okay. And with the situation with the tariffs, this absolutely makes a huge difference in our bonds. People are a little bit wary to buy anything at this point. People are trying to save up as much as they can. The cost of goods still has not gone any lower. In fact, in some areas, certain items are actually even higher, despite what the media is trying to portray. Right? I mean, those of you
Yeah.
guys who are getting gas, those of you who are getting groceries, you're seeing that pain already. So, will it continue? Good gracious, at this rate, I don't know how that could help us as citizens. Let's hope that it'll die down soon. The Feds are meeting on the 17th, and usually, because it is so volatile, the week before Feds meet, the rates tend to be a little bit higher before they readjust it to see what the Feds will say. So if you have any loans right now, as I mentioned before, don't gamble. It's not a time to gamble. Go ahead and lock in your rate.
Yeah, I know we have a client right now, right? That locked in their rate
Hmm.
a few weeks ago and it's at 6.8 conventional.
Hmm.
So as you guys see right here, it's like a little bit past 7% right now. So they locked it in good.
Yeah.
6.8 conventional, so that's pretty good. Um, you know what's crazy too, Lisa? I was talking to a past client like a few days ago, and they're thinking about putting their home on the market,
Okay.
and their HOAs went up so high when since they bought it, and it's only been like 2 years, and their insurance went up so high that
Yeah.
it just made it to where it was just not affordable anymore.
It is so unfortunate, Tia. Remember, we spoke a little bit before we started the show. It's not that people want to sell. There's going to be people that have to sell because
Hmm.
again, it's the cost of everything, not just the cost of groceries, not just the cost of gas, the cost of insurance, the cost of property tax, the cost of Melrose, the cost of HOA. The client that you're talking about, I'm assuming they're in a condo, correct?
Yeah, they are.
Yeah. So for those of you that aren't familiar with how the HOA works, an HOA is a giant bill that is shared between the community in the condominium. Okay, so if there's 100 people and somebody is not making that portion, guess who is left to pick up the tab? It's not the association themselves, it's you as the homeowners. So that sometimes makes it very tricky. Condos are having a really difficult time selling right now because of that. And in fact, I mean, I have another agent going through the exact same thing, Chia, and we're considering doing a short sale on her condo because of the
What?
situation. Yeah.
There's no equity?
Not after all of the payouts and everything like that, too. There's not a whole lot, but here's the thing with short sale, right? Here's the thing with short sale. You really wanted to get out because they really don't like their HOA. The HOA has been really strict with quite a few things. Basically, they got a switch and bait where, hey, we have guest parking, but then they turned it into ownership parking. So now a lot of times when they even want to have a gathering or whatnot, it makes it very difficult for the guests to come into their home. So it's just been a very hard time for them, and they're understanding now the realization, which is tough, because we did have these conversations ahead of time. It's like, hey, what if you wanted this? Their life changed. It wasn't that they changed their mind. It's just like they didn't realize that they would get so much love after having a kid and everything, and everybody wants to see their kid. Things like that you don't consider as first-time buyers, especially as first-time buyers who don't yet have a family. So a lot of times people are looking at it as well in a condo. You hear your neighbors sometimes. My first
Yep, you do.
well, right? So if you're living next to close to a domestic violence type of situation, it gets super uncomfortable too. I was in that situation as well. So there's a lot of things that could happen. So in this situation, your client had a double whammy where they had an increase in the HOA and they had an increase also in their home insurance. I would
And
recommend,
property tax.
yeah, and property tax. And that's the thing too. There's very few large insurance companies that will even insure properties in California. So properties that are a little bit more risky, like condos, like homes that were built 30 years ago, there are a couple more ringaroos that they have to jump through, or they're going to have to get the California Fair Plan, which is the most expensive insurance.
Yeah.
That's basically the default insurance, where
Mhm.
legally you have to be insured. So there's, the government takes over. It's like, okay, well, nobody's going to insure you, then I'll insure you, but I'll definitely take a premium for it.
Yep. Convenience fee, right? That's what they call it.
Oh my gosh, yeah, sure. Yeah, convenience fee. Convenient for them, sure. The consumer, not so much. So for those of you who sadly listened to somebody telling you to date the rate and marry the home, and are still waiting for that one time so that you can refinance, and now you're like, oh my gosh, I was already kind of like right there on the cusp with the interest rate to begin with. I was really, really hoping for it to lower. And now on top of the interest rate not lowering, I can't refinance. I have to pay a higher insurance premium. And, I also have this HOA situation going on, and I bought a brand new build. So the Melrose is also higher too. If you're in that type of situation, selling is not a terrible idea. I know the whole goal is to be home ownerships, and I know sometimes it feels like you're taking a step backwards, but if your lifestyle is highly compromised, and to the point where you're looking down the line 3-4 months, if you're in the red for 3 months, how much of a backup plan do you have in your savings account right now? How much liquid cash do you have? And before that time comes, okay, sometimes you're going to have to pick not between good and bad, but you're going to have to pick between bad and worse. So sometimes it's going to feel like a step backward. It's okay. We've been there. There's a whole bunch of people in 2008 that will definitely share you their story. I have plenty of those. You can reach out to me. I'll be more than happy to share with you how that process works. If you are in that situation and you need to short sell, if you're worried about your credit taking hit, if you're worried about losing your, funds and everything like that, a short sale would be the least of the three things that could happen. Short sale, foreclosure, or bankruptcy. Foreclosure is the worst. It'll take 7 years for you to be able to buy again, to recoup your credit score. Bankruptcy is 2 to 4 years, depending on what type of loan that you have. Short sale is 2 to 3 years, depending on what type of loan that you have, but it won't hit your credit as hard, and the rebuild time is going to be much faster.
We're starting to see a lot of that come on the market now, right? These short sales.
It's trickling in, and it's very unfortunate, because back in the days when we were doing short sales, people were upside down by 50, 100, 200,000. Realistically, it doesn't hurt you it doesn't hurt your score anymore, how much ever debt you have. But here's the difference, okay? When you short sell your house, or when you reconfigure your debt of any sort. So say, for instance, if you short sold your house for, right now, what I'm seeing is about $10,000 to $20,000 of a difference for short sales.
Not a lot, but yeah, around that.
It's not a whole lot, okay? Uncle Sam, at the end of the year, you're going to get a form that basically you have to turn in and state, okay, this is how much I short sold my house for, minus all the deductions of whatever you did to your house, okay? and let's just say you didn't do any, and you short sell the house for $20,000, okay, then they would include that into your income and change your tax bracket, and you'd have to pay taxes on whatever that tax bracket is going to be when you add all of that up. So do be very careful when you're doing that, okay? And yes, it's still a better situation than if you did bankruptcy or if you did a foreclosure.
Well, there you guys go. Mortgage rates. I know we went a little bit on a tangent, but that's the market right now, you know. But speaking about the market, let me just share my screen on the numbers, new listings, etc., all of that. And then we could talk about today's topic. All right. Did you guys miss this chart? I kind of miss showing this chart to you guys. I look
Yeah,
at
I'm
this
always
every day.
curious. I look forward to it every single week. Okay, even though I kind of sort of have access to it, Chia, but I like it being explained to me too. So go ahead and spoil us with
It's a lot of
information.
info. It's a lot of
Yep.
info. But look right here. Inventory is going up. It's slightly going up. New listings are stable. Pending sold pretty steady as well. From last week, okay, inventory went up 6%. New listings is up 19%. Sold homes are down 3%. Pending homes are up 2%. Okay. Now, from last month, I know we've been gone for a minute, so let's just look what we missed. All right. Inventory this month is up 16% from last. 16%, y'all. That's a lot. New listings are, similar, not really much of a change. I know it says 0.1, but it's not much of a change from last month. Pretty similar. Sold homes that dropped 17%. Pending homes did go up. Now, this is interesting, and I kind of figured this was the case because a lot of homes I saw that went pending, a lot of them came back on the market.
Yeah.
So when this drops, right, or this drops, this goes up. And when this drops, depending on which way it went, either this one goes up or this one goes up. It doesn't go back to the new listing. Okay. So
So
I saw a lot of that. Go
So
ahead.
let me add a little bit to that too, okay, Chia, because we have a transaction coordinating business, and for those of you guys that aren't aware, we do a lot of paperwork for realtors, and what we're seeing, okay, it's very common. You mentioned earlier that a lot of them were pending, and then they fall out and they go back on the
Yep.
market. So I don't know if it is a desperate time or whatnot, but I don't feel like many people are getting fully pre-qualified because most of the time
Oh my
it
gosh,
always
that is the case.
the loans. Okay. It's happened 2, 3 times in a house. And we've had several of those, Chia. Like, I know
Mhm.
you had one. Okay. And I know that was painful because it's like, what the heck is going on? Right.
Yeah.
But at the same time, it's like, you are not alone on that. There were so many that just happened. I was like, and it was just I don't even know what to call it, a unique situation, but unique is something that you've been a positive situation on. I just feel like, hey, these people are not only are they not qualified, they actually already paid for an appraisal, they paid for an
Yep.
inspection, they put in dollars for that, and the loan
Hmm.
doesn't go through. And me as a lender, I'm always like, hey, well, I'm not here to take any business. Let me see what's going on, and then let's see how I can help. All the time, 9 out of 10 times, Gia, they weren't really pre-qualified to begin with. It was like,
Yep.
well, why didn't you do this? Why didn't you do that? And most of the time, it's the online lenders that was like, I can give you this rate. And realistically, because they state that their debt to income ratio could have been that, but then towards the end, it's like, oh no, the rates changed. It was like, no, they never changed. You look at the consumer report, it's been on an average of this the whole entire time. So lenders, when you're doing it, these online lenders who are doing a bait and switch, you're not doing anybody service at all.
I noticed there's also a lot of down payment assistance too.
I can see that. I haven't done a whole lot lately, Chia. Maybe it's because my clients are still I show them the down payment assistance, but then they do see the benefit of putting in their own funds.
Mhm.
But I'm not surprised either.
Yeah, that's what I've been seeing. Is the buyers that are using down payment assistance, they're the one that's kind of having a hard time
Yeah.
because something financially changed. They're depending on a gift donor to give them money, but a situation changed with the gift donor, and then now they can't qualify, so they have to back out. And you're right, these buyers intentionally wanted to buy the home. That's why they submitted on it. That's why they paid for their home inspections and they paid for
Mhm.
appraisals already. But once they get the appraisal back and then they go through the final approval, things happen, so and then they
Right.
back out. And that's really unfortunate, but that's what I'm seeing right now. For the homes that are selling, they've probably been on the market for like over 90 plus days, or they probably gone through multiple escrows already and they finally found a buyer that was able to stick it through, or they gave a lot of incentives to that buyer to make it go through and make it work, whether it's to buy down the buyer's rate or give them concessions toward closing costs, just so that way they could feel that there's a little bit of incentive to go with that seller's home. So
Do you
I'm
see it?
starting to see sellers compete with one another now.
Okay. Do you see that that's the case when it's priced correctly, though, or a little
When
bit
it's
below value?
when it is priced correctly or even below market, like comp,
It's fast.
there is no concessions. It's
Correct.
going quick. It's going quick and it's selling because it's a good deal, right? But I feel like some owners right now, they're still conditioned to not gearing towards that route yet. They don't they want to give the concessions, but then with that concession, they want to also sell at a high price. And
Right.
buyers now, like from what I've seen so far for the past couple months, buyers are basically the one that's in control right now.
Wow.
It's not
Okay. Well,
sellers
there you
anymore. It's
have it. If it's a good
buyers.
time to buy right now, would be a good time to jump in, right, Tia?
Right. Yeah. And
Yeah.
especially if the home that you're offering on is a home that you already know has been on the market for a while. It's failed multiple escrows, meaning it went with a few buyers already, but and it canceled, it didn't work out, meaning it went pending and it came back to here. Okay.
Yeah.
And on top of that, I feel that's why the inventory has gone up, is because a lot of these homes have sat for such a long time. Like
Right.
it's not like they're fresh on the market under 2 weeks or even 3 weeks, 60, 90 plus days, and then they get sold.
Right.
And then
Right.
we'll look at the data, later to kind of see what the average days on the market is. But just know that right now, if you're a seller, you really got to be competitive with your marketing, the way you priced it, um, everything that you do with it,
Right.
because right now I really, really do see buyers being the one that's in control of the transaction right now. Like you're
Right.
not seeing a lot of multiple offers right now. When you do, uh, probably more than 75% of those offers are lowball offers. And then the one that they accepted is probably the one that didn't really ask for concessions or gave them asking price. It's not
Right.
like crazy to where it's like 20, 30, $50,000 over asking price, unless they listed it very low to begin with. But if
Correct.
it's pretty fair, they're not getting anything crazy right now. That's
I've
not what
seen
I'm seeing.
it. I've seen transactions where when they do it fairly, okay, the buyer actually comes in with about $5,000 to $10,000 more to get it before the agent puts it on the open house. We've seen that a few times as well.
Yeah. Right
Okay.
now, if you're a clever seller and you're
Mm-hmm.
smart
That's the
and you
key.
want to sell your home, don't get greedy. If
Yep.
you receive an offer and your agent vetted that offer and it's good, they love your home and they do want to really go through with it, just go through with it. Don't wait for other offers to come in, because that buyer is gonna sense that, and that buyer is gonna feel a little irritated and frustrated, and that buyer just gonna probably look at more homes. And
Right.
so that's what I would say about that. But let's move on. Let's move on.
Okay.
All right. So that's for last month. Same time last year. Okay. As you guys can see, we have 45% more inventory this year, this time around versus last year in 2024. New listing is a little bit more by 6%. Sold homes are down though by 20%. And pending home is up 3%.
Okay.
All right.
So let's see if we're heading into another shift soon, huh?
Yeah, we're gonna get there soon.
See, this is great because if you guys had inside information at first, right? 2008 was a rough time, but for you buyers, right? If you knew that in 2008, it would have been easy to buy. So now is an opportunity for us to see, hey, is this a good market for us to jump back in again?
It is starting to shift a little bit, but we'll talk more about that when we get to the data. Okay, now I'll give you guys my 2 cents. This is my first time seeing this for today too. Okay, just FYI. Went down average price per square foot from last week, but it is up 2% from last month. And same time last year, it's slightly higher. Not a lot, just slightly higher. Okay. Days on the market. Okay, this is going to be interesting right here. Average days on the market right now, 27 days from last week, which was 31 days from last month. Okay, so it's 29 days on average. Okay, versus 28. Okay, that might seem like pretty fast, but I'm telling you guys, these are probably home that's marketed, priced very effectively, like very competitively against other homes. Okay, so just remember that from last year, 29 days versus 22 days. Okay, sold price. Active price went up just a tiny tad. Sold price went up by 3% from last week. From last month, it's actually down. Sold price is down by 2% on average. Oh, this is very interesting, Lisa. Look, from last year, average sold price is down 2% this time around versus last year. And active is also down by 4.5%.
That is interesting.
Very, very
Considering May,
interesting.
June, July is the
Yeah.
higher market time, right?
I'm gonna be very curious
Yeah.
what's gonna happen towards the end of May, like into June,
Mm-hmm.
because kids are out of school in June.
Mm-hmm.
I'm very curious to see what June's gonna be like.
Yeah, June or even at the end of June for all
Yeah.
of the college grads too.
hmm Yeah. So I mean, you really feel the market being super active again recently, right? You feel it, right? There's been a
So
lot of
yeah,
activity lately,
yeah.
so I feel it. So I'm just very curious to see what it's gonna be like um next month.
So I forget, Chia, does this chart even talk about new builds? Are new builds factored in this at all? No, right?
No.
Okay.
So that's the thing about this chart is it's only home that's on the market based off of
Yeah,
MLS, right? So if it's a new build, meaning off market, even investors that buy homes that are off the market, you don't see any of that here.
right. And we'll talk about that later. And I kind of knew that already. I want the audience to know that as well because it does make a difference in these numbers too.
It does. It does. So months worth of inventory, we're at 2.6 months worth of inventory versus last month we were almost 2 months worth. So 83% more inventory this year versus last year, same time. Now, okay, so here's what I'll say about this. Right here in December, it was like 1.4, 1.5 months worth of inventory, and it shot up, right? It's been going up, trending. The highest we've seen it was February. It was like 2.1 months worth of inventory around there. If it stays above that consistently and it keeps trending up to where we're no longer seeing the 1 month worth of inventory,
Hmm.
we're gonna start to see the market shift completely. Okay. We're not there yet because as you can see, it's not really consistent. This trend only started happening within the last 3-4 months. Okay. But still 2 months worth of inventory is not anywhere close to a buyer's market yet. It needs to be
Yeah.
over 3 to 4 months worth. Okay. We are getting there, but for how long is this inventory gonna last? That's really the question you gotta ask because that will determine how the market's going to shift. And you're already seeing the market shift. Like what I said earlier, right now,
Yeah.
buyers are more in control. Buyers are getting what they're asking for. And if they're not, they're canceling. And then to the sellers that need to sell and they don't want to restart the process again with another buyer, it's in their best interest to just accept those concessions and then sell it.
Right.
Because the longer it sits, the more that seller is going to be losing.
Right.
Because how do you know that the next buyer is not going to ask for something similar? And
Right.
how do you, and then while the home is sitting on the market, you, the seller, are still paying for your utility bills and the mortgage. So, you're losing based off of your net overall. So you have to factor all of that in.
So right now, Chia, what is the average home prices in Sacramento County?
The average price right now. So if you're looking on this, based off of this, it's 602,000.
Okay, 602,000, you guys. Okay, it continues. The average continues to rise. Okay, will the average get a little bit lower once we get to inventory that's consistently 3 months, consistently in the next 3 to 6 months, right? That may shift a little bit, but please also consider, okay, guys, please also consider the reason why I asked Chia that question is because homes that are over, I would say 650 are sitting a little bit longer right now.
Yeah.
Before it was 800. Last year, I would say more of the closer to the 800 range. Right now, anything above 650 is feeling that pain if they don't price it correctly. And anything under 500 is still going like hotcakes, guys. So don't think of this coming in and was like, oh, okay. Well, you guys said that it's like, buyers are more in control. Yes, but we're not to the point where you can negotiate $20, $30, $50,000 worth of credits or a lower price reduction if it's priced right and if it's below average price in the county.
Let me just show this so that way we could kind of
Mm-hmm.
have a better idea of what you're saying. So that way the viewers could see as well. So now I'm changing the price point from 0 to 650,000. So that way you guys could kind of see what I'm talking about. Okay. So look right here, months worth of inventory for a home that's over 650,000. It's 4 months worth.
Mm-hmm.
You see that? Last year was 2 months for this pricing. So you guys can see, look at this. You guys can see this price point, there's way more inventory for this type of buyer. Right? Over 650,000. And we have about 4 months worth of inventory right now for this listing. So what does that mean? That means with the same amount of buyer pool, they have more options now. If it was still around 2 months worth of inventory, then that wouldn't be the case.
Yeah.
It will still be gone pretty quickly. But because it's at 4 months worth and it's trending up, as you guys can see here.
And that's the thing too. It's not that many people don't want the house. Many people aren't able to afford it the way that they used to. And they do have to be mindful of their expenses because of what's going on in our economy right now, right? Yeah. Everything is expensive.
See, like, look right here. There's like 144 homes I sold this month that was over the price point versus last year. 199.
Yeah.
This is very interesting.
So with the new homes that's coming out too, right, Chia? Can we talk about that one?
Yeah.
Okay.
Let's talk about that.
Yeah. Homes in the 650 ranges, right? You're also competing with new builds. There are plenty of new builds that are coming out right now below the 600 mark. And a lot of people are in this thing. I was like, well, if I'm buying an old home for 650, I might as well buy a brand new home for 650, right? Or even 600. And
Yeah.
sometimes you have to really look at the numbers as a whole, right? You get $50,000 here, but that's a starting point of that house. Okay. That's just the starting point of that house. So if you want to add the floors that you want to add the countertops, you want to add the hardware, it can go higher. I've seen most of my people who are in a brand new build, they typically spend anywhere between $20,000 to $50,000 more than what they initially planned to spend to begin with. On top of that, if your concern was like, well, I kind of want my payments, right now I'm right there on the cusp of qualification, be very careful about that, right? Because in this industry, there's a lot of agents and a lot of lenders that want you to buy the max possible, because the bigger the purchase price, the bigger the loan amount, the bigger the commission check. But at the end of the day, you're the one that's making that payment. You're the one that is shelling out all these dollars for it. So be very wary. Take a look at a whole. Take a look at all the paperwork. Take a look at the Mello-Roos added property tax. Is it really truly worth it? If you're paying $500 every single month higher on property taxes, that's $6,000 a year. Okay, that's $6,000 a year. Multiply that by 5, that's $60,000 already. So if you're asking, okay, what's the difference between a 600,000? I'd rather get a $600,000 house versus a 650 house. That 650 house that you just bought, probably one has more land. So take a look at all of that too. Okay, you're paying that one time versus every 5 years, you're paying an additional $60,000 just for that $600,000 house. So be very wary about that.
So I kind of wanted us to react to this video. It's about
Okay.
Zillow. Somebody
Okay.
was kind of making a video about basically price cuts, inventory rising, and what Zillow was updating based off of May. So I kind of
Okay.
wanted us to watch that together. And then that way we could kind of give our reaction to it. And this is it right here. Okay. Let me know you hear, okay? Did you
Okay.
hear it earlier when I was playing it a little bit?
No, I didn't.
Okay, good. Do you hear
New
now?
data is in from Zillow, and it's giving.
Okay, so let's watch this, okay? Let's all watch this so that way we can kind of go over our take.
New data is in from Zillow, and it's giving us a clearer picture of where the housing market is headed. I'm Dave Meyer, and today I'm joined again by Orphe Divounguy, senior economist at Zillow, to give us a sneak peek into their unreleased housing market update. We're going to talk about shifting inventory, changing buying behavior, and what Zillow's latest forecast says about home values and mortgage rates for the rest of 2025. Whether you're buying, selling, or investing, this is a must-hear for those wondering where the market may head next. Let's get into it.
Again, it's a forecast, so that means it's not gonna happen. It's just what they think may happen. All right, so just a disclaimer right there.
Welcome back to On the Market. Thanks for being here. You've become a friend of the show. You're here time in the housing market developments. Real estate investors and people in the housing industry should be thinking about these days.
Well, the fact that inventory is rising again.
Yeah.
The total number of homes for sale was so low during the pandemic. And now we're actually seeing some markets have more inventory than we've had before the pandemic. Nationwide, the deficit in inventory compared to before the pandemic is the smallest it's been in a long time. I think we're looking at more inventory on the market than any time since August 2020.
Yeah.
And so I think that's good news. That's good news because, historically, more inventory is linked to more buyers, more sales, a healthier housing market, a more liquid housing market. And so this is good news.
I agree. More inventory is gonna be a little bit more healthier for everyone. There's more options. The buyers don't have to compete as much. Price is gonna be more stable. It's just gonna be more balanced. So I agree with that.
Okay.
Yeah, I totally agree. I think people have this diverging opinions about it. It's in some ways everyone decries the unaffordable housing market we're in, which makes sense. But then if prices start to go down or flatten up or inventory starts to go up, they get all nervous. There's no sweet spot for a lot of folks here. But I am with you. I think we have been in this unhealthy housing market that is too strongly tilted towards sellers for a really long time. And
That's right.
Obviously don't want the pendulum to swing all the way back in the other direction, but just seeing more inventory as an investor and someone who cares about the housing industry, I think it's really important that we're moving in this direction.
It's about balance, right? It's about balance. We want a more balanced housing market. The gap between buyers and sellers was so wide for so long. And I've said it time and time again to a few people. Look, your first-time home buyers are essentially renters who saw their rents increase way faster than their wages, than their incomes. And so the renters are strapped for cash. And by the way, mortgage rates increase as well. They're facing the worst affordability conditions. And then at the same time, you had these sellers, well, homeowners, who saw the value of their homes increase so much. They're sitting on near record home equity, right? In some markets, you've seen some price drops, but still, you see, you're 45% higher than you were before the pandemic. You've accumulated so much home equity, you were able to refinance your monthly payments at a low cost. So you're comfortable. And so there's a big gap between would-be buyers today and sellers. And the good news is the gap is shrinking. As more and more sellers return, inventory rises, those sellers are out there are realizing that maybe, it's kind of tough for buyers. And so the question is, okay, like I hear people say all the time, is that a bad thing? And I say, no, it's not. The pendulum was so far tilted in favor of sellers. And I also say, look, price cuts sell homes. Look at builders, right? Why are we seeing new construction sales increasing so fast across the country and continue to increase? Because builders have realized that, well, they can make a few adjustments, cut prices here and there, provide a few incentives, and they'll continue to sell homes.
Not just that.
Yeah.
Their incentives for in-house lenders is just ridiculous right now, right? It's like they're losing money and they're okay with it.
Yeah.
Right. So I don't really know like how they're able to do that.
Well, like you said, they're willing to lose money on one business to gain the sale of the other business, right? They're still making money, just not as much as they typically would.
So do you think, I don't know if you're familiar or the process of how a lender gets paid and all that. I know that for someone like you, it's a percentage based off of what they borrow, right? And when they become an in-house lender, does that compensation plan change?
So it really depends on the in-house lender, right? I have never worked as an in-house lender, but I can only guess a couple of things because this is how the retail banks work and everything like that too. And when they recruit us, they share with us their compensation plan, but this is before this whole change. So my theory is that they have to have a quota structure. That's why they're so pushy, okay? One, they have a quota structure, and then two, they pay, unfortunately, very minimal. They have to, in order to,
and they have like one person handling hundreds of buyers.
Correct. So that's the only way that person would make a decent wage, right?
But quality control is at its worst.
Of course it is, because how do you handle 100 deals doing so much work and everything like that and getting paid from what our industry calls it peanuts, right? I mean, they can do probably 50, 60 deals a month that would probably pay them a lot less, and probably retail too, because I can't imagine a loan officer who wants that position unless they're actually getting, a little bit more compensated. But then again, Chia, you've also seen it as well. You've seen the turnover. It's very quick turnover.
A lot of turnovers.
Right? A lot of turnover, a lot of miscommunication, a lot of no communication even at that, right? Miscommunication is one thing, that there's no communication. And I still have clients, and that we share clients where I tell them, like, the incentives are so great. I would hate for you to miss out on it. But guess who's the person who's breaking it down for me? It's still me. I don't get compensated for that, but I'm okay with that, because
that is crazy. Like, the reason I brought that up is because we have a few clients, right, that went to new builds, right, and then they went with the in-house because the incentive was just crazy, ridiculous good.
Yeah,
and they still rely so much on you to guide them through that process on that loan, because they don't understand none of it, because the in-house lender is not doing that for them, and it's so it's just so frustrating, right? And because and the other thing too is, like, sometimes, like, no kidding, the in-house lender handles so many clients that sometimes they mistake our client for a different person.
Oh, I know. It's so horrible. And what's so sad? It's just like, okay, For instance, one of our clients, right, who was supposed to get $20,000 worth of incentives and everything, and the bank originally charged him like almost $7,000 just to get a rate that I could actually give them an additional $3,000, right? But still, that $20,000 to $3,000 is still a $17,000 gap, right? They ended up actually only getting a $12,000 credit, but still, $12,000 is still better than nothing. They're finding their way to lose less and less and less, right? They're still losing on the lending side, but they're not losing as much. They'd rather lose it on that
overall
side.
cost. Yeah.
Yeah. So then that way they make themselves super competitive. The other thing too is they're also doing something really I don't think is cool at all, where you only have 45 days to make up your mind. That's ridiculous. Anything could happen between now and 10 months from now of when you purchase that new build home, and their deposit requirement is a lot higher. So
They're getting very clever with their contracts.
yes, they're
So
getting
just
so
be
super
warned.
aggressive with it. And I would not be surprised, because back in 2008, all these new builds that came out, many of them were bankrupt here. I wouldn't be surprised if somebody started a class action lawsuit. So I'm saying it out there is, if you guys feel that you are taken advantage of, know that you have rights too. It doesn't matter what that contract says. You have rights as well. Back in those days, those contracts are still $300. I mean, $300, 300 pages. Okay. So you still have rights. If it's so favored to the seller, okay, and you want to sue them later on, do it.
Yeah, it's crazy. It's crazy. It's like they're keeping your deposit. They're making you keeping your deposit as hostage to
Yeah.
keep you on the deal. But like what Lisa was saying about that 45-day, anything can happen after 45 days.
Yeah.
Right?
Yeah.
Because if your home takes a year to build, after that 45 days initial contract, like anything can happen. You can lose your job, and they don't care. They're just gonna say, well, you still have to, within your power, try to get approved.
Yeah.
So it's like, what the heck? Like, what if I got injured? What if something happened?
Exactly.
Like, so I do see that happening down the line, Lisa. There's definitely gonna be a lot of lawsuits coming towards these new bills because they're being clever.
So they think that they're being clever. They think that they're being clever, okay, but they're also being very, very super greedy. They're being clever in a very greedy way, which is going to catch up with them. Okay. All right, guys. Unfortunately, Gia's internet is down. So I hope that you guys got a good gist of that show. We appreciate your time. We thank you so much for your time. We hope that you got some really good nuggets for that today. But it looks like we're going to have to end it today. And I wish you all the best. Have a wonderful Memorial Day weekend. Have a good one. Bye.